Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, December 11th, 2018. We'll take a quick look at the charts and see what happened today, what it means or doesn't mean technically, and where we might be headed from here, most importantly. All right, we're going to start out with a post I made this morning. I'll go into the homepage of Right Side of the Chart, scroll down a bit to this one I made before the market opened today, about an hour and a half. Actually, I'll go ahead and open that. The charts were taken. I screenshotted these charts around 7:30, but it doesn't matter because at the time, and these are the charts. We're going to open these up. So this is the NQ, the Nasdaq 100 E-mini futures, and at the time, I pointed out that both NQ and ES, the S&P 500 futures, were at resistance where I expected a pullback. You can see that resistance level is about 67.74. And that is indeed what happened. I had a scenario pullback and another thrust up here. Not so much today, but this is my near-term target. And a couple things happened. We did stop from there. That was again, this was 2 hours before the market opened. We traded sideways from there. Had a slow or went slightly higher, a little higher than that, but we did pull down. Now we pulled back a little bit more than I wanted to see to keep the bullish case alive. If you followed my analysis recently, yesterday morning, based on what I saw in the futures, Sunday night and yesterday morning, I went to a bullish and long stance. At least this is all near-term stuff. Keep that in mind. If you are a long-term investor or a typical swing trader with holding periods measured in weeks to months, this is all the short-term stuff. Active trader stuff. Now there may be, and I said there may be a case for a bottom here, but we have a lot more work to be done. And before I get into all these charts, let me just say this very clearly, and I've said it many times on the site recently and in these videos. The markets are just above critical, a very important support level. And so they're in a very precarious technical posture. I mean, we're just literally one bad day or even half a bad day away in this market from breaking those support levels. So, don't become complacent. I'll point out what I think is going to happen, what I'd like to see happen. And if we continue to see more upside, that'll help firm up the bullish case. But right now, it's still anybody's game to rank today on a scale 1 to 10. I should say 0 to 10. So 5 can be a neutral midpoint with 5 points above, 5 below, 10 being the most bullish, 0 being the most bearish. I would say today was a 6. So I'm giving it, slightly bullish day. Why? Well, first of all, we closed green. SPY was up 0.02%, and QQQ was up 0.33. Now that's a trend that I've been watching. That's why I'm long Q and not SPY right now. Financials, industrials, again, weak today. But I see a common theme here, and it's now day after day that the tech stocks, the big market leading FANG stocks, seem to be washed out. Remember, they let us down. They started this correction. They were the ones that started to come down hard, brought the markets down while the SPY and everything else held in there. And so they seem, for the most part, washed out. That doesn't mean they can't go down anymore, not by any means. It just means they're pretty much sold out because they've already corrected quite a bit, washed out a lot of weak hands, and have come to levels where right now they're outperforming. They're outperforming even on a down day. It's called relative performance. The QQQ is doing outperforming or has relative performance against SPY. So let's go ahead and finish this. So what happened again? I was looking for and would have preferred to see a mild pullback and then a quick thrust up. That would have made today much closer to, at least again day by day. Don't read too much into one day's price action in the market now or at any point in time. But that would have given us a good 8 or better on that scale. But what happened is we pulled back pretty impulsively and a little more than I expected. Not a lot more, but we got the pullback where I thought it would come. And but we pulled back right to support. I'm going to get to the updated charts in a second. Again, we're working off this morning's chart. I just want to show you there. But that's a pretty important support level. And again, in the trading room, when we hit it, I said, look, I didn't like how impulsive the pullback was earlier today when they faded the rally. It was more impulsive than I wanted to see. But with that being said, I said this is an objective area to go long with a stop not too far below because we were at support right here on NQ as well as ES, and more importantly, big support on SPY and QQQ, all of which I'll get to in a second. So that's what happened today. We did reverse from there, but we didn't take out today's highs. We're going to need to do that to build on the bullish case. And again, it's anybody's game. I'll get to the updated charts here in a second. Before we leave NQ, let's just look at ES. I posted this one as well. It's taken about 7:30 this morning, showing you the same similar thing that we were at resistance. Have that at 2670 right here, and expected a pullback, and we did get a pullback, but it came again a little bit more than what I expected. In fact, SPY was a weaker again of the two indices, with big selling in the financials, industrials, same things that were down big yesterday, and but most importantly, this is a very, very critical support. I keep talking about it. Very solid support, very well defined. This is where we had what I'm working off of right now, except my convictions aren't super high, that this was a false breakdown, aka bear trap. This break below the 26.25 level yesterday. And if so, bear traps are very, very bullish. But what happens? The shorts pile in, and then they start to get squeezed out as you move up. And therefore, that's one reason that I was leaning towards and would have much preferred for the bullish case to see a mild pullback today that would have stopped even shy of today's gaps being backfilled. They did backfill today's gaps and then some. But that was my preferred scenario this morning. So let's just take a look at what did happen from there. All right, this is the updated chart of NQ. I'll zoom back out so they look the same. So that's where we were today. We took out the trend line. So what was bullish today? Well, like that. Like I said, we took out the trend line. We went a little bit past that 67, 74-ish resistance, and we pulled back as was expected, but it was again a little bit deeper. You can see here, I wanted to see this, and I got this. But what I did get is a back test of the downtrend line today, successful back test, and a very nice back test, or well, we'll call it nice because it held so far, of that 66, 64-ish support level right there. You can see if we zoom in, I'll take it in a little tighter here. You can see those two 60-minute candles right here, 1, 2. Beautiful action. Look at the bodies right on that support level with two little candlestick, little wicks right there, or little, should say tails right there that come down below. But those are intra-period breaks, and we snapped above it, just like right here. You have a lot of candlesticks. You want to see the maximum number of bodies and or candlestick shadows there, and that shows that that support level was successfully defended. Again, we bounced from there, but we closed pretty much in no man's land. What I mean by that? Well, smack between support and resistance. So this movie will have to be continued tomorrow. It is still anybody's game. Again, the fact that we did close green on QQQ and SPY, but even more so on QQQ, like I said, I'd give it a 6 on that scale of 0 to 10, with 5 being neutral. So just barely bullish. A lot of work to be done. But at least we gained. We made forward progress. And again, I'm seeing it looks like a lot of the market leading stocks are for at least maybe near term oversold, or sold out, I should say, not oversold, sold out. But we'll see. So those are levels I'm watching, and again, levels I'll watch tomorrow. What do I want to see now? Well, 63.74. Since we popped above it today, what's more significant now would be today's high. So we want to see today's reaction high get taken out, and for the bullish case, that is, of course, and want to see us definitely remain above today's lows. Anything else? Like I said, it gets pretty thin down there, especially with the SPYs, the SPY and ES testing key support today. A breakdown below could open a waterfall sell-off. So tread carefully if you're trading this market and you know what you're doing. Then I probably don't have to tell you this. If you don't know what you're doing, this market will chew you up and spit you out. So just use stops and keep your position sizes on the lighter side to account for the extra volatility. Otherwise, if you're using a large or normal position size, these intraday price swings that we're getting lately of 2-3% and sometimes more will take out just about anybody the most reasonably placed stops, again, if you're actively trading. But if you've been doing that, I don't have to tell you that. I'm sure you've had, and you cannot trade this market without having stops taken out, at least not the way I trade. But if they take me out and then I see something, I was taken out today a couple times, and but I like this, and I mentioned, again, in trading room, that's an objective long area, and went back long there, and boom, up for where we at. And I took it home. It didn't quite get to where I wanted to see us close today, but I think it's worth it because, again, I give today a slight tip the scales slightly into the bull's favor. All right, that was NQ. Let's look at ES and we'll move on to SPY and QQQ. So ES, zoom out a bit here. Funky candles going on. There we go. All right, let's zoom back in there now. All right, so what's happened since this morning? I added this downtrend line right here because now we have a third reaction. I like to see three reactions, 1, 2, 3, to help validate a trend line. And so that's a level to watch, as well as there's that's where we were about 7:30 this morning when I took those screenshots around that 2670 level. And you can see, so we did get the pullback that I was looking for, but and then some. But we came down, most importantly, to this is very key support, 2625 right there. Again, it has contained all of the pullback so far in the SPY since this correction started in October. And again, I'm excluding intraday spikes. I talked about that recently. And then I'm also going off the working theory, somewhat, I don't have the highest conviction, but so far working off that this was a bear trap, aka false breakdown, sucked in a lot of shorts, and we reversed there. So we back tested that level today and held it so far. Again, a bear trap, usually you see pretty impulsive buying once it occurs. You just see the shorts, they don't let them back out. They don't give you an opportunity. If you shorted that and you're getting squeezed out, you usually don't get such a nice opportunity to get back out. So it may not be that. We'll see. But right now, taking this market day by day, minute by minute, and to keep it very simple and straightforward, these are the levels I'm watching. So today's lows and today's highs, and we close right about in the middle there. So if we pop up and we take out today's highs, we're also going to take out the downtrend line. I know I'm working off the futures here. Again, I'll get to SPY and QQQ in a second. And I'm still looking for that thrust up here at about 26.96. And again, these are minimum targets. If we get that tomorrow, then that would be quite bullish, and that might open the door for a bigger rally, like I talked about, maybe a Santa rally, December rally, whatever you want to call it. Otherwise, remember, the lows are just below us. One bad day, one big move down in the futures, one gap down could take us and give us that flush out move. So let's jump out to the daily charts and talk about that. All right, corrections. Well, they can end in different ways. Some corrections end with a bang, like this one here, that first one back in February lows, and with an explosive move up. There's been others out there. The market lows in 2009 were a great example. But others end with a whimper. Some bottoms end with a whimper, like that second one around. You can see here we bottom, had a little kickback rally, came back in again, and just kind of worked our way up from there, making a series of higher highs and higher lows. So what am I getting at? Yesterday, it's possible that this correction ended with a whimper, not so much a bang. We'll see. Bang is usually, and we still may get it, and that would look something like a big red candle. Maybe we're down 4, even 5% on SPY, QQQ, super high volume, followed by a big reversal the next day, or even that day, later that day after we hit the lows. Come back up, put in a big, doji type candlestick, hanging man, something like that, and then rock it up from there. That would be a bang right now. If this is a bottom, at least a temporary bottom with a rally for a few weeks, maybe even a couple months to come, then that would be, I'd say this one ended with a whimper. But only time will tell. Too early to say. But again, check mark so far, 2 green candles. We'll take it. And if we can build on it, all the better. Okay, here's a 60-minute chart of SPY. In fact, let's take away some of those lines. And again, very, very well-defined, important support level. Here it says 262.96. The one I've been working off of recently was 263.15. Either way, call it 263-ish. That's right around 263. The important thing is we've had all 3 bottoms come from around that area, other than this little brief breakdown below, and the fact that we broke down and didn't keep going, we snapped back above. So far that's bullish, but again, this is what I'm trying to impress upon you guys. we're sitting on the edge of a technical cliff right now. This is a very important support level. We're precariously close to that level, so we're not out of the woods yet, and there's still plenty of work to do. Intermediate term trend is bearish. Long-term charts have been busted, so we don't really have any type of capitulation type selling yet. It can go either way. So just tread lightly, and if you don't know what to do, cash is a great position right now. I've talked about that quite a bit recently. Finally seeing it come out of the papers. Through the last 2-3 months, I've talked about how cash and all assets were going down or didn't look good. We didn't have a favorable. It was just about everywhere I looked. We had some tactical trades on gold and treasury bonds, but other than that, just about all asset classes have been falling, and cash is king this year. And that's because most of that happened where cash outperformed all other asset classes. That article just came out a few days ago or in the last week. But most of that happened just recently with the market going down, bonds going down, everything else. So that's that. There's a big range we're at. Remember, bigger picture. If you haven't seen my analysis recently, this, darn it, wrong tool. Let's try to use that box tool again. Here's the SPY just grinding around in this range, and that's not going to happen forever. That's one thing we know. We'll break to the upside or to the downside, and right now we're flirting with the bottom of that range. So TA 101 says you go long at support if you expect a bounce, certainly objective with a stop somewhat below, or if you're bearish and you're expecting a downside break, then you go short. Now that's what happened here, and again, that's why I'm working off that theory that this may have been a bear trap. But again, the fact we've come back and tested it, it's still there. We're still above it, but let's see what happens right now. If we take it out, then we have those lows, but we'll probably just slice right on through there. If we come back and try to test those lows again, I don't think they'll even act as support. That's my guess. And targets, if my preferred scenario does continue to pan out, then we come up here again, 270.36. That's what I was looking at this morning, and those the post I put out before the market opened. And I would like to see that happen tomorrow, and we'll go from there. If it does happen, it helps to firm up the bullish case a little bit more, I should say. And QQQ, I was looking at in the same post that I made this morning. That's this post here on the front page. SPY, QQQ, these were the hourly charts. There was that 270.36 I just showed you there. So what happened today, again, these were at 7:30 this morning. These were as of yesterday's close, but yeah, posted at 7:30 this morning. And so we came back to that 263 on the pullback. So if we can get a thrust up here to 270.36, probably get a reaction there, things will be looking better. So let's see what happens tomorrow. QQQ, similar story. I had us reversing off that 166 level today, which we did. With a shallow pullback, we came back a little more, but I believe we held this 162. We'll get to that chart in a second. And if we can continue on up, hopefully we'll see 168.50 by tomorrow, and that will help firm things up, and that'll maybe a little area to take profits. Game another pullback trade like today. I was able to close some longs, reverse it there, and although I got in a little early, then I got stopped out. I was able to recycle in long again at the lows, and so far so good. So that's my trading plan right now. And again, I'll watch the futures. I like futures because I will not be caught in a 3% gap down tomorrow or any day, because they'll take me out overnight in the futures long before we have a chance to drop 3%. That's a downside limitation to trading ETFs because they're trading regular market hours, and you are at risk if there's a big move in the futures. By the time the QQQ and SPY start trading, even in the pre-market session where trades are still thin, but you could see a big move overnight in the futures, and you can't really avoid that. So just be careful. Just keep your position size light until volatility abates. Okay, and one last chart, and we'll wrap it up here. This is a 15-minute chart of QQQ. One of my favorite trend indicators, and you can use it on multiple time frames, is using the signal line, the 9 EMA on the PPO. Let me put this white so it stands out a little better. I use that as a trend indicator. I use that when it's the last of the two to cross on the PPO pair, because that's your signal line. It's going to follow the other line, and it's a simple yet effective trend indicator. When the 9 EMA is below the zero line, that's a dotted line, the trend is bearish. So from here to here and coming into there, the trend was bearish up until about this point. Then it said right there, come up right there, and that's about where it crossed. Said the trend was bullish. Give it a little bullish trend here. You can see didn't really go nowhere. It was mostly sideways, but you had a bearish cross here, bearish trend. Then at this point right here, crossed over bullish, and this whole rally right there, it told you that that trend was bullish until shortly after we started correcting, and it said bearish, bearish, bearish. It told you right here. That's why I use a signal line. So the PPO line crossed, but the signal line had a perfect rejection off zero, kept the trend bearish, and told you stay out, stay out, stay out. Again, not I don't trade on this standalone. It just helps to confirm or refute my other analysis. And if it's my analysis is refuted, maybe I step back or don't take a trade. And point being that we crossed bullish right here the other day, and we're still above that the zero line right now. And by tomorrow, we'll either successfully bounce off the zero line, keep the trend bullish, or we're going to cross back down. And that will be just one other sign that, hey, and that will also, remember, we tested support at the lows today. So if they both get taken out, again, stops. Like I said in the trading room today, when I mentioned the futures, going back to that today, I posted these charts. Where were they? The NQ, when the futures had fallen down to this level, 66, 64 or so, we're actually a little bit below that. Hold on one second. Okay, here it was. Right here. These were the charts posted again in the trading room about 2 o'clock. So there was NQ fell to support, showed us objective long entry, also back tested the trend line. And so that's where I would like to see us go. That's where I think we might be going. But again, my convictions are not super high. I do this because this is what I do. I'm going to give my opinion day in, day out. When my convictions are stronger, I'm going to tell you they're strong. When things can go either way, and especially if there's a potentially big move in either direction, you need to be careful. So trading 101, go long at support with a stop not far below. So far it worked out today. Nothing huge. Remember, we closed, right in the middle there, smack in between. So we're pretty much in no man's land between support and resistance. So I'd still maintain a stop not too far below those levels. Long with a stop not too far below works. Or if you want to short a break of that level, or even where you're at right now, if you want to short where we closed today, just I would use a stop above today's highs on both EQ, NQ, ES, QQQ, SPY, Dow, whatever you're trading. All the indexes are going to move, give or take one another. There's a lot of pressure on the Russell right now. When we recover here, you're probably going to see a big surge back into the large gap, the names everybody wants to buy. The Russell is setting up for a trade. I think it's a little bit early there, and I'll probably update that in a separate video, or maybe even make that an official trade idea if and when the charts start to firm up here. Right now, we just don't have. I don't have a strong enough conviction to put on some swing trade longs that can last for more than just a few days. This is an active traders market. Not a buy and hold or trend trading market, because again, the trend for now, although the intermediate term trend is bearish, for the most part for the last few months here, it's been largely sideways to slightly down, especially in the NASDAQ 100, which is now looking a little bit better. I am going to wrap it up here. We'll pick up tomorrow. We'll see where this goes. One thing about this market, it moves quick. So anything I'm pointing out today, and like I always say, the markets are dynamic, and so is my analysis. Slightly bullish and long today can be short and bearish tomorrow, or even tonight, depending on what happens. So I'll try to do my best to communicate my thoughts. If they change, we'll leave it here. This has been Randy Finney with the Right Side of the Chart. I hope you enjoyed it.